Good morning, everybody. I hope you're all doing incredibly well. Good morning, KB. Good morning, Hidden Agendas, Danny and Kishan. I hope you're all doing incredibly well. Everybody over on Binance Square, they seem to have broken the chat because everybody's gone from talking to not talking. But let's get the stream on the road. Good morning, everybody. It is the 3rd of February, 2026. We're already 3 days into the second month of 2026 and Bitcoin is still not playing games. I hope you're all doing incredibly well today. We have a busy show as always, and we have some absolutely incredible breaking news which we're going to go through in a minute. But what are we going to be talking about today? Now, this is going to be controversial, okay? Because a lot of the time we like to be a little bit controversial. We're going to be talking about Epstein, warships and golden butts. Okay, Epstein, warships and golden butts. So for the algorithms out there, all of those red lights will be flashing. If we make it through on all the channels that we're streaming on today, God help us. We're also going to be talking about XRP. We're going to be talking about hype. Again, everyone loves hype. We're going to be talking about that. We're going to be talking about Polygon. Yes. Am I still bullish on Polygon? Yes. Are we going to be talking about it at the end of the show? Yes. We're also going to be talking about Raoul Pal. Now, there is somewhat of an intellectual debate at this moment in time going on between the likes of Benjamin Cowen and the likes of Raoul Pal. Benjamin Cowen is saying that Bitcoin precludes the money printer. Basically, Bitcoin goes up before the flow of money into the system. And Raoul Pal is saying that Bitcoin goes up after the money floods into the system. Now, of course, both of them I highly respect. I think they've both added a lot to the industry. Raoul Pal is a little bit more mercenary, in my opinion, than Benjamin Cowen. But there we go. So that's what we're going to be talking about when we talk about him as well. We're also going to be looking at the charts. We're also going to be looking at some X-Files. But before we begin, I just want to point out on the screen in front of your very eyeballs right now is the Maple Finance Quiz Night. That is tomorrow night at 7 p.m. 7 p.m. is 8 hours from now, wherever you are in the world. So if it's 1 p.m. right now, wherever you are, this will happen at 9 p.m. Nearly got the numbers wrong then. This will happen at 9 p.m. If you are like us and it is 11 a.m., we will be streaming at 7 p.m. So 8 hours from now, wherever you are. Good morning, Tariq. I hope you're doing incredibly well. We do have some news that the OGs in chat will know about. Danny, Kishan, Tariq, KB, they all know what this news is going to be. And we're going to leave it for a little bit before we tell you. So that's what's happening tomorrow night. But what we are going to do right now is we're going to head over and have a look at the prices. Because, as I was saying a week ago, before the price fell even further, we're still feeling a bit bottomy. I still think we are at the point of not necessarily no return. We're at the point of either bouncing or having a considerable fall more. We're not. I think one of those two things is going to happen. I don't think we're going to stay where we are. Now, we're coming in at $78,500. That is up a little bit on yesterday. Ethereum at $2,300 has been, literally the back doors have been smashed in. Vitalik, I don't know what he must be crying into his tofu salad this morning. XRP, again, down $1.60 per XRP. Solana broke below $100, has recovered a little bit, back at 103. Hype is at $37. In fact, I didn't realize it was up another 18%. It's broken into the top 10. It has flipped Cardano, which is still under 30 cents. I did not know this. I didn't look at these prices before we started the stream. So Hype is now a top 10 coin. Clearly, it was always a top 10 coin because we don't count USDC and USDT. But now it's officially a top 10 coin. Incredible. Binance Cash is there. That looks like it's likely to flip Cardano as well. What are you doing, Charles? Sort this out. Market cap significantly under $3 trillion now, down at $2.63 trillion. Another reason I think we're going to have a bounce is the fact that we don't just go down forever. We don't go up forever. We don't go down forever. I'm expecting a relief rally probably back into the 80,000s. Not going to sit here and tell you we're going to go to 97, 95,000. We're going to have, in my opinion, a bit of a bounce into the 80,000s, because I think we've come down a little bit too far, a little bit too soon. Lots of people are telling me we're going to $50,000, $40,000, and I said yesterday I don't believe that at all. Gainers then over the last 24 hours, Stacks is up, Hype is up massively, Meme Core is up, not a fan of that. Polygon is up, and we're going to be talking about that. But again, let's not revel in a 13% pump when the coin is down 90%. Okay, it's like being battered in a boxing ring by Tyson Fury, and as you're lying there in a pool of your own sweat and blood, Tyson Fury trips up on your foot and falls into the ropes. Okay, you can't claim a moral victory that you had him on the ropes when you're on the floor covered in blood and stitches, and that's where Polygon is right now. I love the project. It shouldn't be at 11 cents. The technology behind it is better than the price action, in my opinion. But we are where we are, and it is at 11 cents, and it is up a little bit. Maybe it bounced back off 10 cents, who knows. Lighter is gaining, Morpho is gaining, MYX Finance is up, Canton, Asta, again Asta hasn't done too badly. Still around the 60 cent mark. It's not doing too badly. Kronos is having a pump. It's having a day in the sunshine, isn't it? 8.3 cents. And then we're not going to talk about gold. Unlike every other crypto streamer I have watched, every one of them has at some point brought up the gold chart. We don't talk about gold, okay? What happens in the land of gold stays in the land of gold. I couldn't care less what the price of gold is, or silver, or palladium, or copper. I don't care. We're not about that. We're about crypto. Losers then, Monero and Zcash are down. I do believe Monero and Zcash are going to fall by the wayside. I do not believe for 1 minute that you should be putting any of your money into privacy coins. Not financial advice, but they're going to be predominantly banned around the world within the next 5 years. I believe that the Americans, the Saudis, the Europeans, the Asians and the Africans, there will be some kind of global announcement saying that privacy coins are not allowed because they lead to bad actors being able to funnel funds, which I also agree with, by the way. And I've never been a fan. I don't care about the pump. I'll never buy Monero or Zcash or Dash or any of the other coins. They're down. Chiliz is a trash coin. Chiliz is a fan token project where they create fan tokens for likes of PSG, Manchester City, Everton, I think, have got one as well. Again, trash coin. Would not touch it with Tariq's. Okay? Wouldn't go near it. If Tariq said to me, listen, Mike, go and put $500 onto Chiliz for me, what I would do is I would take his $500, I would give him $10 back, and I would go and put $490 into Bitcoin. And then what I would do in a few years' time, when he says, how is my Chiliz doing? And it's down another 95%, I'd give him another $10 back, and I would pocket the change. Because that's what you're doing when you throw good money after good money. Chiliz is trash, and it will always be trash, and I'm never going to support a token which exploits the loyalty of fans in any sport, and that's what they do. Stable is down, OP is down, Uniswap is down, ASI is down. Lots of decent projects, again, in the bottom 20 for losers today. I don't know what to say about that. I don't think it's the kind of market where you should necessarily listen to any one individual. It's easy to listen to people when things go up. It's easy to listen to, I'm trying to think of George. Comes out, sits on his patio, tells you the Bitcoin's going to go up another $5,000, and it does, whoopee. Tells you that Ethereum's going to go up to $3,800, and it does, whoopee. It's easy to listen to people when things are going well. When things are going badly, you do need a difference of opinion. You need to watch and listen to different people, not just me, not just Crypto Banter or Crypto Lifer, for example. God help you if you listen to him. But don't listen to one voice. This is the type of market where we're treading slowly downwards and to the right. We're in a bear market. get everybody else's opinions as well, because it's important that you take a spectrum of opinions. Now then, this is really important to kind of explain to you where we are with the Bitcoin supply, and I don't bring it up that often, so bear with me, it's important. The other one that we bring up is the top 100 coins. We've not done that today, so I've saved you that. But this is a historical breakdown of who is buying Bitcoin. Now, again, I don't care about the price of Bitcoin right now because we are where we are. But look at the Bitcoin mined in the first column, 14,000 Bitcoin a month. Look at the global ETFs. Look at what they have bought since the start. They have bought 692,000 Bitcoin. In the same time, just under, I better scroll up so you can see, just under 400,000 were produced. So, 400,000 Bitcoin have come into the world, have been born. We then have almost 700,000 being bought by the ETFs, 524,000 by MicroStrategy, and then basically all of the treasuries have bought 200,000. So let's call it 1.4 million have been bought, and there's 400,000 being made. So where has that million come from? It's come from the OGs that all capitulated and buggered off, and it's come from you every time Bitcoin falls in price. So the thing that I want to draw your attention to is the global ETFs since the all-time high. Since the all-time high in October, they have sold 65,000. You might think that's absolutely terrible. They're perfectly entitled to sell what they want. But then look at the combination of MicroStrategy and other public companies. That's coming in at 63, 72, 85,000. So even with the ETFs selling off, MicroStrategy and the other treasuries have bought more Bitcoin. It's just that the extraction of Bitcoin out of exchanges has slowed down in the last 3 months. It hasn't stopped. It's still being sucked out, but it's sucked out at a lower rate. And I think if there was ever a chart to show people a bullish future, it's this one. Now, I do not expect the ETFs to continue to sell at the rate they're selling. Maybe they do. I don't believe that MicroStrategy will continue to buy at the rate it's buying. Maybe they do. But at some point, it doesn't matter as long as there's more than 14,000 Bitcoin being bought, because that's the kind of the net. We want more than 14,000 being taken off the market. Otherwise, the supply goes up, and guess what? Price goes down. So as long as net 14, 15,000 a month are being bought, that's all I care about. Moving on then. We don't normally do any kind of Binance Square or Binance advertising, but you know what? We stream on Binance, so here we are. There is a USD1 airdrop campaign going on. The basic APR is 16%. The boosted APR is 19.46%. You can earn almost 20% on a stablecoin that has a $5 billion market cap through Binance. Now, I've always told you more than 6%, there's a problem somewhere down the line. That's true. But it's not true when there is a stable coin that is trying to gain massive shares of the market. And that is what USD1 is doing. World Liberty Financial, they're trying to get to $20 billion, $30 billion in market cap for their stable coin. They're at about 5 or 6 now. I don't know what they are exactly. So to do that, how do they do that? They have to incentivize you. They're incentivizing you through cash. They're incentivizing you through giving you WLFI tokens, and that's what they're doing. So as far as I'm concerned, USD1 is as good as Circle, it's as good as Tether. If this was Athena, an algorithmic stablecoin offering you 22%, I'd be telling you to run for the hills. Not in this case. So if you do have some spare cash on the side, have a think about using USD1. As far as I can see, it's as solid as the rest. Smaller market cap, yes, but it's backed by the Trump family. It's backed by the Saudis. It's not going to fail. Now then, Eleanor Terrett, a Brit gone Yank, has basically gone over a very important meeting yesterday. This was between the crypto industry, the banks, and stablecoin yield. This is the kind of the Rubicon. Okay, we have the banks paying you 0.25%, 0.1%. We have stablecoins able to possibly pay you 4, 5, 6%. Banks see this as an existential threat, and they're right, because why would you earn 0.1% through Goldman Sachs when Binance will pay you 19%? You're not. You'd have to be an idiot to stay with 0.1% APR. However, the banks are pushing back on the ability for stablecoins to pay a yield. That's what they're pushing back on. Now, there's going to be loads of ways for them to get around this, but this is the battle that's going on. Now, there were some very big people there yesterday from the banking industry. Fidelity were there, PayPal was there, Blockchain Association was there, Cantor was there, some of the other exchanges were there, Ripple clearly and Tether were going to be there. It was a 2-hour meeting, and apparently, yes, I didn't know why she did include it in this one, positive vibes, no yelling. Now, what I think has gone down is this. I believe the banks have said, listen, you can't do this. You're going to kill us. And the stable coins have gone, we know. Now, what I would do if I was Trump, and I'm not Trump, clearly, I don't wear enough orange fake tan. What I would do is very simply turn around and say, listen, you're going to die because they're going to kill you, but you can work with them so the customer gets a better deal. So maybe there is a compromise. Maybe the compromise is that banks can use the stablecoin yield to pay you 2% and still go off and do their 99% rehypothecation of your funds and have a fractional reserve of 1%. Maybe that's the future. But I think working together, everybody wins. And if everybody wins, ideally, retail wins. And that's what really matters at the end of the day. I, of course, will want stablecoins to win because they pay a higher yield to your aunt, your uncle, your nephew, and your granny. That's what I want. And I obviously don't think 3 or 4% is outside the realm of possibility. I think there's a very fine amount to be paid out. Certainly not the likes of 25, 35, 45% or whatever you can get when you start to loop and use very sophisticated tools on the likes of Camino Finance. But at the end of the day, if Granny Smith can put her $10,000 away and earn $400 a year, that's $400 of very nice treats she can spend on herself. Whereas at the minute, she's getting what? $10 a year? It's not fair on the majority of people. So this is a really, really big conversation that's going on right now. And I think there's going to be compromise because Trump wants compromise. He wants a deal. That's what he wants. And I think he'll get what he wants. And they've even said that he will step in. Now, Barry Silbert says the crypto pullback is flushing out leverage and weak tokens, predicting a major capital rotation into stronger digital assets next. This is a gift from the crypto gods, clearing out the leverage. Crap tokens, a massive capital rotation into crypto is about to begin. Time to pick your fighter. Barry, we've been picking our fighters for 3 years. We pick our fighters and we try and pick the best ones, okay? We don't chase silly little tokens. We try and chase the big main tokens because they are going to survive. The projects with real business opportunities, the ones that can really work, we go for it. But again, I do not believe that we're going to see a massive capital rotation anytime soon. There is not going to be a massive pump into crypto randomly in March. Wrong time of the year, wrong time of the market, wrong time of the cycle. It's the midterm year. We haven't got rid of Powell. I don't see it happening anytime soon. Are we back or is there more blood? Do you know, I don't know. I don't know. I really don't know. I normally have an opinion. I genuinely don't. We're either going to go back to 74,000 or we're going to go over 80,000. And if I had to pick, I'm 60% sure we go up and 40% sure we go down. But I do think we're bottomy. I feel bottomy. I mean, October was a blink of an eye ago, and we were at 126,000, and we've come all the way down to 74,000. That's a $50,000 correction in what feels like no time at all. I think this has been a faster correction than 2021, 2022, and that we had FTX blowing up. So we've come down faster and quicker. So I think we will bottom probably faster and quicker. But I just don't know. Jeffrey Epstein, I can't say too many of these things because you know what the AI algorithm will do. He has a connection to Bitcoin. Can you believe that? Well, I thought this was too good to not include in the stream, so bear with me. I don't know how many documents were released, 10,000 or 3,000 Epstein documents. Let me make this a little bit bigger so you can see it. Epstein's close association with the crypto industry, Bitcoin in particular, was first revealed in prior Epstein file releases, which shone a light on Epstein's tie to early Bitcoin development activity. The newly released files contain 1.8 thousand references to Brock Pierce, formerly a child actor in the Mighty Ducks. He then chaired the Bitcoin Foundation and previously co-founded Blockchain Capital and Tether and many other things. Among the released documents are numerous instances of pre-IPO investor updates related to Epstein by Pierce. In multiple examples of correspondence to arrange both in-person and remote meetings. Their relationship was established in 2011 before any of Pierce's cryptocurrencies endeavor begin. We can't talk too much about the certain words. Epstein invested $3 million into a certain exchange through Brock Pierce's Blockchain Capital. The documents released, and the purchase allegedly secured Epstein a face-to-face meeting with Fred Ursham. Epstein appears to have sold 50% of the stake back to Blockchain Capital for $11 million. Is that it? Perfect. Right, so there are other references in the documents that talk about him having conversations with the Bitcoin founders. Now, clearly, people have put two and two together and said Jeffrey Epstein and Satoshi Nakamoto knew each other and sat down and had a conversation. No, that's not what is said. What is said is that he met with some of the founders of Bitcoin, some of the people that helped build Bitcoin. That is as far as it goes. So when you see people saying Jeffrey Epstein knows Satoshi Nakamoto, remember this. No, he didn't say that. Some of the founders. Now, Brock Pierce, just for reference, there are many documentaries about Brock Pierce. Many documentaries about him and his foundation. In fact, Brock Pierce and his friends, they bought a cruise liner, a massive, great big cruise liner, and it actually came to Gibraltar at one point. Me and the Oracle went down. We've got photos of it. It had the Bitcoin logo on it. It was pretty cool. And then they realized it was literally a money sink, and they were going to waste millions and millions of dollars on it. And I think they scrapped the idea in the end. But he was talking about creating Bitcoin Island and having this place where all these hippies can go. And it's great to have a hippie island when you've got $100 million in your back pocket. Of course it is. But I've never really liked Brock Pierce, and it has nothing to do with Jeffrey Epstein whatsoever. I just don't like him. I don't like him. He's one of the people that first came to crypto, first promoted crypto, so we should thank him for that. But I just don't like him as an individual, and that's all there is to it. So there you go. So that's the scoop on Epstein. Now let's get on to some serious stuff. Now, I think this is the headline of the day. This is Warships inbound. Because, of course, the new chairman of the Fed is Kevin Warsh. Come on, Warships. I thought it was funny. Kevin Warsh, is he a hawk, a dove, or the next Volcker? Markets are about to find out. Now, I don't believe the correction in gold and silver is simply down to the fact that Kevin Warsh has been announced as the head of the Fed. I don't believe that at all. I don't think he's got that much sway in the global gold and silver markets. I think they both just ran up, overheated, and corrected to the downside. Simple as that. So I think they've put too much, not too much faith, but too much belief in that fact. And again, we'll talk about that when we talk about the money supply as well. It's like, if you go back thousands of years, okay, and I stub my toe, and I'm a farmer, and I stub my toe, and it rains, there is cause and effect. Stubbing my toe causes it to rain. Jump forward 200 years and you'll have a clan of farmers kicking stones and bruising their toes, asking for the god to rain on them. Okay, that's how these things happen. Kevin Walsh can't be solely responsible for $12 trillion to be wiped out of gold and silver. It's just not possible. Okay, but as far as I'm aware, he is very positive. He's very pro-crypto, and that's what we want. President Trump has nominated former Federal Reserve Governor Kevin Walsh to lead the U.S. Central Bank, instantly reviving an old debate with real market consequences. Is Walsh a hard money hawk or a quiet dove, or something closer to a modern-day Paul Volcker? Now, there he is. Now, what I'm going to say about this is Trump puts in yes men and women, and he puts people in charge that are loyal to Trump first, good at their job second. And that's just the way he works. Rightly or wrongly, he's become a very, very rich man on doing this. But this is now an ally. And what tends to happen is he'll get Walsh in there, he'll get another few people in there, and then suddenly it's going to be a pro-Trump Fed. And then in 3 or 4 years' time, when maybe the Democrats win, the Democrats will try and get a probably pro-Democrat Party Fed. That's how it all works. So the answer matters because investors are already trading the nomination as if Volcker himself had just walked back into the Federal Reserve building. Trump announced the nomination on the 30th of January, framing Walsh as a steady hand capable of restoring credibility and discipline at the Fed as Jerome Powell's term winds down in May. The timing is not subtle. Trump has repeatedly criticised Powell, as we know, making Walsh's policy instincts the central question. He arrives with baggage and receipts. He was a Fed governor from 2006 to 2011, earned a reputation as one of the most inflation-focused voices on the board, repeatedly flagging price risks even as the global financial crisis pushed unemployment higher and deflation fears spread. Remember, 2008 was that was the big one. That was the big one. I remember in 2008, we had an investment account and the entire world was on fire. And there's documentaries made about it. The Big Short is a great, great film to watch. If you don't know what happened in 2008, that is a great film. There is also a really good documentary, I can't remember if it's on Amazon or Netflix, about what happened in 2008. And not just about what happened in 2008, but who was involved. The bankers that were involved, the names of the bankers involved, and the fact that they all got away scot-free. The people who lost in 2008 were you, okay? They caused the problem, they built the problem up, they over-leveraged, they created some prime mortgages, which were mortgages that were never going to work, never going to get paid back. They built up this huge credit mountain, and then it collapsed. And at the very end of the documentary, they talk about the fact that all of the safeguards that were put in place after 2008 were all removed in about 2024. So we're going to see at some point in the future another massive credit crash at some point. So he was in the Fed during this period of time. Now, at the time, he said, inflation risks, in my view, continue to predominate as the greater risk to the economy. Those views hardened into a public philosophy after he left the Fed. He became a sharp critic of QE, calling the central bank's swollen balance sheet a distortion that blurred the line between monetary and fiscal policy. My overriding concern about QE then and now involves the misallocations of capital in the economy and misallocation of responsibility in our government. And then it talks about Volcker in here. Now, clearly, he is a yes man to Trump, but he is also a very knowledgeable man. You don't put some idiot in charge of the Federal Reserve. So he's picked his candidate. He is going to come in May, and I believe he is going to start. He is going to signify the bottom of the bear market. His appointment in May or June is going to signify, I think, the bottom of the bear market. And we talked about it before, we're not going to talk about it again, but I think May, June, July, we get our last final bottom. We can go back to 2022. and we can look at what happened in the summer of 2022 when Solana was scraping along the bottom of the barrel. Bitcoin was going down towards $16,000, $17,000, and then we started to recover from that summer. I'm not guaranteeing it, but that's how I think we're going to play out. In a bear market, you come down, you spend about 12 months suffocating, thinking it's all over, and then we go up. That's what I think is going to happen. Now, very macro today, and it was not expected to be macro today. But there you go. Anyway, let's get on with this. Just 1 second. Let's make sure we're here. I've still not told you the announcement. We'll keep that. What drove the crypto crash? In brief, crypto markets are reacting to a macro squeeze rather than any sector-specific breakdown, according to Real Vision co-founder Raoul Pal. He argues that the common denominator is tightening US liquidity, with capital rotating defensively into gold and cash-like assets. And again, we talked about this yesterday. You can pick one thing and you can say this is the one reason why this is happening. And that's never the case. Never the case. Things happen, and the collection of those things happening lead to an outcome. Bitcoin topped 6 weeks before we said it would top, but it topped around the time it should have topped. It's now coming down. It's gone up to the bull market support band like it's always done, got rejected, and it's had a very, very strong move down, stronger than the majority of people expected. That is not something that has anything to do with the price, with the level of liquidity in the market. It's got nothing to do with QE, QT, or anything like that. It's just its own pattern. QE, quantitative easing, in my opinion, it just adds to the price because it deflates the value of the dollar. So it adds to the price of Bitcoin. The global events that go on around the world, they detract from Bitcoin if they're negative. But on the whole, Bitcoin is moving in a cyclical pattern. It's just these things have a positive or a negative effect on that pattern. So maybe it pushes us a little bit higher, maybe it pulls us down a little bit further. But they all have their own little effect. It is like that buckaroo with the donkey, and you're putting the things on the back of the donkey, and then eventually the donkey will kick everything off. That's just what happens with Bitcoin. Bitcoin moves within the same macro environment as the S&P, as gold, as everything else, oil especially. So, Raoul Pal, however, argues that it's the liquidity in the market which drives the crypto price. Now, just let's point one thing out. About 6 months ago, this man stood on stage and he pointed at this chart and told us we were in the banana zone and told us where we were going to go on this banana zone. Now, what none of you have heard since he gave that presentation is the term banana zone, because the banana zone didn't happen. So Raoul Pal is now going back a step to talk about liquidity. It's amazing how he's not mentioned the banana zone. It was on his lips every sentence. He'd go and order his food. Can I have a nice glass of Chianti and a pizza and a banana zone, please? Yep. Can you hang my coat over there where the banana zone is? Everything had banana zone in it. Tumbleweeds now, because the price has come down. It didn't go anywhere near where he said it was going to go on his banana zone. So I'm not having a go at him. Clearly I'm not having a go at him. No one knows. Look at Tom Lee. Tom Lee, every time the price goes down, Tom Lee adds another $10,000 to his price target for Ethereum. So Tom Lee, his nuts are in that vice, okay? He's about to put in the biggest loss ever recorded by a single individual. So his nuts are in that vice, okay? And they're all, basically, we have a term in the north of England, they're all seeing their arse. Okay, that's what they are. They're all seeing their arse because they've given these ridiculous price targets, which were never going to happen. 250, 350, $1 million. The correlation that says that the decline is not driven by crypto-specific fundamentals, regulatory pressure, or internal market stress. Instead, it reflects a broader contraction in available liquidity as financial conditions tighten. Therefore, when liquidity dries up, highly liquid and speculative assets are sold first. So when you move into a risk-off asset, risk-on assets are sold first. Yep. When you move into a time when there's not a lot of risk-off assets, gold and silver, they sell off. Risk-on assets become more desirable. That's how the market goes. But I don't think it's based on liquidity. This dynamic might explain why crypto assets and growth equities are weakening. Gold's strength during the downturn reinforces this view. Indeed, as liquidity tightens, capital tends to migrate towards assets that benefit from defensive positioning. Again, there is some validity in this, but it's not the whole reason. If Powell's assessment holds, crypto's next major move will depend less on internal market developments and more on shifts in macro liquidity. Historically, Bitcoin has performed best during periods of expanding global liquidity and easing financial conditions. And again, financial conditions ease when the macro is in a good place. When you are in a pandemic, or when you are in wars, or when you are doing lots of things and there's a lot of political or global macro events that happen, the markets tighten up. And when the markets tighten up, you go to gold, you go to silver, but mainly you go to gold. So that's just the way the world is. Now, let's say tomorrow, the Russian conflict comes to an end, conflict in the Middle East comes to an end, Iran comes to an end, all of the conflict in the world just calms down and goes away, okay? That is a relief. Then the world can get back to pumping money and credit into a system, and then prices will go back up. Now, what happened first to cause that? The world became a more peaceful place. So everyone is happier to go and take risks on Bitcoin. But if you think there's going to be bombs dropped somewhere, you buy gold. It's just the default. So when you see people buying a lot of gold, it's a couple of things. It's China buying gold, it's Russia buying gold, it's India buying gold, yes. But people themselves want to have a risk-off asset, and that is gold. So people are just scared, and when people are scared, they don't want to buy Bitcoin. You go to somebody in the street who their job's under threat, and they say, right, well, what do you want to do? They're going to say, well, I'm going to try and pay my mortgage down a bit more. I'm going to try and pay off my credit card debts. If you go to somebody who's just got a new job and they're being paid 3 times the amount of money that they were, they're going to say, oh, you're going to go and buy a new car. I'm going to go and buy some Bitcoin and Ethereum. I'm going to go and buy a new house. Because their mindset is in a different place. And the global mindset right now is not in a happy place. So we can blame and say it's money all we want, but the money is not the cause, it's the symptom of everything else. So, as I said, Raoul Pal is a seriously clever man. And I would in no way be able to lay a glove on him when it comes to what he knows about the markets, financial markets. He's a genius. Fair enough. He retired at whatever, he retired at 40. He now does this. He works for SUI and stuff like that. Great. Fair play to him. I just don't believe you can boil the entire system down to one thing, and money. And I said this at the time when people were posting up pictures of the M2 money supply. I was saying, okay, that's great, that's lovely, but that's not the reason. And guess what? Those people's charts have all vanished off X because they don't talk about that any longer. By the way, bananas are beautiful, okay? I have nothing against the banana, okay? I don't want to be clipped saying that I don't like bananas. I love bananas. In fact, I have a banana most days. All these high IQ investors, says KB. Do you know what? I think the thing is, the more you realise that you don't know everything in life, I think the better life you have. That's just my opinion. I know 5% of probably what I need to know. Now, you could go and ask many of these other people, and I'm going to tell you right now, they're going to say they know 80 or 90% about their trade and what they know. And I don't think you do. I don't think there's any... You can only know enough to understand what they're talking about and then maybe make a decision based on that. The majority of people, they don't know what they're talking about half the time. And yeah, they are high IQ. Doesn't mean they're right. Vitalik's made a right load of cock-ups, and I think he's probably one of the brightest people in crypto. He's made so many mistakes because the point, when you get to that level of intelligence, you lose common sense. Goldman Sachs releases Ethereum report. The price fell but. So this is golden butts. Okay? So we've given you Epstein. We've given you warships. And now we're giving you golden butts. Nowhere on the internet are you getting this level of reporting. Nowhere. Okay? And I look. If I could watch another version of me, and I'm not saying I would watch me because that's the most nepotistic thing I would say. I don't mean that. What I mean is, I'd love to watch somebody else talk about the news in a different way than the majority of them. Wendy O does, to be fair, but she doesn't do very long shows. Anyway, US investment bank Goldman Sachs has assessed Ethereum following its recent major decline in the cryptocurrency value. Just want to point one thing out about Goldman Sachs and everybody else, and I'm going to say the same thing about them I say about Raoul Pal. These were the guys telling you that we were going to go to $20,000 in Ethereum. These are the guys that were telling you that we're going to go to $15,000, $30,000 in Ethereum because Bitcoin's going to go to $300,000 or $400,000. I guarantee if I go to Grok and say, Grok, give me all the price predictions for Bitcoin and Ethereum written by Goldman Sachs in the last 12 to 18 months, I guarantee you they were sky high above where we went to. Because nobody got this right. Nobody got this right. Especially these people. Now, the reason I say this is some banks, not all banks, some banks get great headlines by putting out massively, massively bullish price predictions. Bitcoin's going to go to $1 million within the next 3 years, 5 years, 10 years. It gets headlines. It's good PR for that bank. So again, these people will write these great headlines, overinflated headlines. Nobody's going to read an article that says Goldman Sachs predicts that Ethereum will go back to $3,150. No one's going to read it because it's not that far away from where we are now. But if Goldman Sachs say Ethereum's going to go back to $8,000 by the end of 2026, everyone's going to read it. And that's what they do. So just be careful. Again, just because they wear suits and work for Goldman Sachs, they still have butts and they still go to the toilet. The bank noted that the average daily number of new Ethereum addresses in January surpassed the summer of DeFi period of 2020. What a ridiculous comparison. I don't know how many people were in crypto in 2020, but it's probably about a quarter of what we've got now. Following the declines at the start of the week, major crypto assets, Ethereum, Solana, etc., seen limited recovery. According to Goldman Sachs, despite the weak price outlook, on-chain data paints a different picture. Daily active addresses are up, new addresses are up. On Solana, again, Solana addresses are up. According to Goldman Sachs, the number of new addresses created daily, particularly on Ethereum, has reached a record high. Now, again, this figure is significantly higher than the average of 162. We don't care about that. It noted that Ethereum's current market cap has fallen below its realized market capitalization. Realized market capitalization represents the total cost basis calculated based on the price of each token at the time of its last on-chain movement. That a large portion of ETH investors are currently in a loss position at current price levels. Timothy Meiser, research director, has also highlighted the importance of ETF inflows. The steady flow of ETH inflows into cryptocurrency is a key factor. Well, I've shown you that they've been going down for the last 3 months, so I don't know what they're talking about. What I would say about this is, I could go to my wallet right now and create 20 different wallets on Ethereum and Solana and Bitcoin and everywhere else. I could create 1,000 new wallets on each of these chains in probably a matter of half an hour, 2 hours, something like that. This is completely the wrong metric to base the activity on a chain. Number one, you'd have to discount all the empty wallets. You'd have to discount all the empty wallets. You'd have to discount all the wallets that haven't carried out transactions. Once you do that, you're probably closer to active wallets. Then you'd probably need to say, right, well, each wallet needs to contain a minimum of $100. Doesn't sound like a lot. It would get rid of 90% of wallets. So again, these figures are BS. I say the same thing about TVL. People will write articles saying that the TVL on Ethereum has dropped 20% in the last few months. Well, guess what? 20% of the Ethereum price has been wiped off in the last 2 months. But it's not about the TVL. It's how many Ethereum are staked, how many people are trying to stake Ethereum, how many people are trying to unstake Ethereum. They are far better metrics for Ethereum and Solana than this garbage on your screen right now. Okay? It's garbage. This is trash. Okay? You don't read stuff like this. It's garbage. Look at, if people are trying to stake their Ethereum, it's because they don't think the price is going to go up and they want to earn a yield. If you're seeing a ton of people trying to unstake, either the price has gone up to the point where they want to sell, or they've given up on the chain and they want to get out. Simple. But track that. Track active wallets, track wallets with a minimum deposit, and there you go. Quelle surprise. The same when Binance talks about having 300 million users. Does it really have 300 million users? And I'm not picking on Binance here, but I'm not going to talk about other exchanges. I would hazard a guess that maybe 1 in 5 people use Binance that have created an account there. That's 60 million people. It's a lot of people. I would guarantee if you go to another exchange that's got maybe 100 million people, maybe they've only got 10 or 15 or 20 million active users as well. So it's not a Binance issue, it's a market issue. They can just go out and say, we've got 300 or 400 or 500 million customers, the same way that Ethereum's making 400,000 addresses a day. It doesn't mean they're being used. It doesn't mean they've got value. It's not adding anything to the chain. That's the problem with a lot of people. It's cheap, lazy reporting. It's cheap, lazy investigation. It's garbage, okay? And you get fed this garbage. And what do you say? Garbage in, sophisticated garbage out. You don't want Gizgo. Now, this is so small, I don't even think I can read it. Ripple secures full EU license, XRP giant unlocks Europe. People were saying, why hasn't this pumped the price? It hasn't pumped the price because Europe is like that uncle that comes to your party that nobody likes, dresses like they're from the 1970s, wears white socks and brown shoes, has massive handlebar moustache and a mullet, and stands in the corner talking about the great Don Revie leads of the 1970s that nobody cares about, right? That's Europe. Nobody cares about Europe, okay? It's overregulated, it's got a dictator in charge of it, and it's garbage. That is why XRP has not pumped. Not because XRP is a bad project, Europe is the bad project. And I'm not saying that you shouldn't. I'm not saying that Europe's got leprosy or anything. But as a block, if you had to deal with America or Europe, you're picking America. If you had to deal with Saudi Arabia, UAE, that area, or Europe, Saudi Arabia, UAE. In fact, Asia, Africa, America, North America, South America, you deal with them all before you deal with Europe. They don't care about progress. They care about risk. And they live their lives scared of making mistakes. And there needs to be a whitewashing of all of the EU. And they need to kick them out. When was the last time the European Union bloc created a multi-billion pound or dollar or euro enterprise? What was the last big business that came out of Europe? I could name you 20 companies that come out of America. I could name you a couple of companies that have come out of the UK. Hardly anything comes out of Europe. Hardly anything. Okay? Just same old. Make some wine, make some meat, make some cheese. Put a rail link in every once in a while. Knock down all the nuclear power stations because we don't like it because we're all green hippie lefties. Europe needs a change and it needs to become more business orientated. And that's the problem. So that's why the price isn't pumped. I don't care about the EU Electronic Money Institute license. I don't care about any of this. They're not going to make anything out of it. It's just going to be institutional money. It's going to make no difference in my opinion. It's just going to be added to a stable. And if you ask me, I don't even think the EU was in the top 3 or 4 places that XRP went, in my humble opinion. Look at America. Who was America fighting with? It was fighting with Canada and Mexico, because clearly they are its neighbours, and it was fighting with India, Japan and China. It wasn't fighting with the UK, it wasn't fighting with Europe. You go back 30 years, Europe and the UK would have been probably two of the first 3 or 4 that America would have tried to have sorted out. Not anymore, because the power has shifted, the volume has shifted, and they just know the Europeans are a pain in the backside. They over-regulate themselves. Paralysis by analysis is as true in Europe today as it was in other places that I'm not going to mention the names of. All right, Hyperliquid to launch prediction market outcome trading. This is probably what caused the pump in the price of Hype, to be honest. If I go back here for a second and we just time this. Where are we? 36.20. This pump started about here, didn't it? Yeah, so I would say this was the reason for the pump. So Hyperliquid is to launch a prediction market outcome platform. Now again, Hyperliquid is one that I missed. Not that I missed it because I didn't hear of it. I missed it because I didn't look at it. And by the time I looked at it, it was, in my opinion, too late. It was like $28, $30 by the time I looked at it. A lot longer after the event. And the reason I don't look at projects as soon as they come out, within reason, is because there are, for every one Hyperliquid, there are 20 companies that just don't go anywhere. And I don't want to go down the route of chasing the next big project again. We did that 3 years ago. I was looking back at our old videos and we were reviewing every project that came out. We didn't have anything to say about it because we had no trading history. We had no idea how the company worked. We were basing it on their white paper and their tokenomics and things like that. And really, at the end of the day, we were saying, this looks fantastic. This could go up. This could hit $1 billion or $10 billion or $100 billion. This looks absolutely amazing. But what we were basing that on? Potential. 3 years ago, back in 2022, 2023, fine. That's what we should have looked at. Markets are different now. We look at the established players because, as that other guy was saying before, pick your winners. Picking your winners does not mean picking a new boxer that's never had a fight before. And Hyperliquid, this time last year, had never had a fight before. So we're not going to pick Hyperliquid, so we missed it. Doesn't mean we don't like the project. Doesn't mean you shouldn't go and buy it. Means we're not going to buy it. Now, they are making a lot of money in terms of volume, in terms of revenue, and importantly, in terms of profit. So they tick all the boxes. They tick all the crypto warehouse boxes for an investment. Does it make money? Yes. Does it make profit? Yes. Is it easy to explain in an elevator how it makes all of those things? Yes. So, big green tick for Hyperliquid. Where the big green tick fails a little bit is when you look at the price. Where should you buy Hyperliquid on this chart? You should buy it down there at $20. So your buy-in to Hyperliquid should probably be somewhere in the region of $20 to $25. Maybe if it keeps growing exponentially, maybe the bottom should be $30. But $20 to $25 is where I'd buy Hyperliquid. And if we go back in time, it wasn't that long ago. We were down here. We had this entire period down here. We then had our initial run-up, which took us pretty much to $60. It's come all the way back down again, and it's going up. So it's likely to continue to go back up. But again, if you buy at $20 and sell at $40, it's 100% profit. If you buy at 36 and it goes to 50, you're making 40% profit. Your profit is buying it in the red zone and selling as far as you can at the top of the green zone, or hold it if you want. So they are going to offer a predictions market. Outcomes are fully collateralized contracts that settle within a fixed range. They are general purpose primitive that are useful for applications such as predictions markets and bounded. This is the HIP4 thing, isn't it? Yeah. Hype jumped is up 7%. Again, this is the darling of 2025 and 2026, if there was ever one. It could have been Sui, it could have been Ton. They died, they went too early, but I think it's Hype. Look at the coins that have tried to challenge the top 10 if you want to try and find the projects which are the new thing. Solana came out of nowhere in 2020, 2021. Absolutely ripped, kept ripping week after week, up and up and up and up. Hype did the same thing, fallen back with the market. It's now on its way back up. So HIP3 trading via TradeXYZ exploded last week, with it processing over 12 billion in volume compared to 3.75. Very, very nice. This could be very bullish for pre-IPO trading on Hyperliquid. We're about to see the most news-driven IPO cycle ever, OpenAI, SpaceX and Anthropic. That there will undoubtedly be demand to bet on those markets, but the fundamental flaw for pre-IPO perps is they rely on sketchy, unverified private data. It's too risky. Predictions markets solve the Oracle problem entirely. No oracles, no liquidation risk, less incentive for toxic flow. Actually, yes. There is going to get to the point where there will be too many predictions markets, the same way we got to the point where there was too many NFTs. How many NFTs are too many NFTs? How many predictions markets are too many predictions markets? We've seen Polymarket probably tie up the majority of users. You've then got Keisha or Kelsha, that's probably in second place. Hyperliquid is likely to go third. CZ is talking about bringing 6 to 12 predictions markets to the BSC, the Binance Smart Chain. Great. At some point, there is expansion. And then after expansion, there is contraction. And what that means is very simply put, we will grow to maybe 100 sexes and 200 dexes and 80 predictions markets over the next few years. There will come a point where competition reaches a certain level, where certain sexes go, we've got 1.2% of the market, you've got 1.3% of the market. If we merge, we have 2.5% of the market, but economies of scale will make more money and will merge. You will see the likes of Cup Exchange and Coffee Exchange come together and create Cup of Coffee Exchange, and they'll have a bigger market. And that's the contraction phase. It doesn't mean the bubble has burst. It means projects which haven't succeeded to the extent they wanted to succeed, and other projects that succeed but probably didn't get to where they want to go, they'll just partner and combine. And that's a good thing. You really are going to get to the point where there's only going to be maybe 20, 15 major exchanges in the world. You're probably going to get to the stage where there's only maybe 10 or 15 dexes in the world. There's always going to be smaller exchanges, smaller dexes, the same way there's always going to be smaller banks and bigger banks. So it's just part of that thing. So Hyperliquid will probably go to be the third biggest or the fourth biggest in the world, behind the big two. And then there's probably going to be some point in the future where some of these things start to merge or the lines blur. Maybe predictions markets gets added into the likes of Binance or into the likes of other exchanges, and then the entire thing just becomes a blur. And I think we're going to get to that stage at some point. Right, we're going to talk about Polygon very briefly at the end. Let me just check the time. 11:57. Wasn't it Europe that came up with the environmental friendly annoying bottle cap? Absolutely. It drives me potty. Now, I used to wear glasses before I had my eye operation. You try drinking out of one of those bottles with that stupid cap on, okay? You need the strength of Thor himself to rip that cap off a bottle. Now, how many people around the world caused injuries to themselves because of those bottle caps? And then compare that to the number of turtles that actually were affected by these bottle caps. Okay, I think it would be cheaper to buy every turtle in the ocean a swimming cap or a net. Okay, it'd be cheaper to do that than do what they've done with bottle caps. Anyway, Polygon. Now, just because we don't talk about a project doesn't mean we don't like a project, but if there's nothing to talk about, we're not just going to sit here and say, by the way, guys, we still love Polygon. Now, we love Polygon. And about a month ago, maybe 2 months ago, Brogan, the Oracle, he had the pleasure of being on an AMA with Sandeep, the CEO of Polygon. Quite a big thing for us, really. Quite a big thing for the Oracle. He got to ask Sandeep about the direction of Polygon. Sandeep, basically, at the end of last year, was fed up with Ethereum, fed up with the way that Ethereum was treating Polygon, fed up with everything, and was talking about becoming a layer one. Now, they are looking to seriously change direction, and quite rightly. As he said, Sandeep said, a few months ago, if Polygon was a layer 1, its market cap would be 10 times higher than it is today. And he compared it fairly with other chains and saying, if you compare our volume with their volume, if you compare our number of users with their users, NFT projects, etc., we're a far larger project. Now, I don't know where Polygon is on the top list of coins. I know it's at 1.2, 1.1 billion. It's ranked 52nd. Okay, so it's the 52nd biggest chain. I really wish this was fixed. You know, some people wish for like donkeys and BMX bikes for Christmas. I would like CoinMarketCap to work. That would be my letter to Santa, because it loads. There we go. Right, so Polygon is ranked down here at $1.2 billion. We were talking about Polygon when it was at 60 to 80 cents, which is putting it up in this range here, which is about the Chainlink, Monero, Canton, Bitcoin Cash, Stellar range. That is where Polygon should be. I am not going to sit here and say Polygon is a $50 billion project. It's not. It's a $5 to $10 billion project any day of the week. It's sitting here, okay, because it's like the ex-girlfriend of Ethereum, okay? Ethereum recognizes its existence, but doesn't want to know it, doesn't want to talk to it, doesn't even want to include it in any of the family photos. In fact, it's got a pair of scissors, Ethereum, and it's cut Polygon out of every Christmas party, every Valentine's Day meal, every birthday party it's been to. Polygon's been cut out. Okay, that's what Ethereum has done to Polygon. Now, Polygon has started to make its own moves, and I believe it's going to become its own layer 1, because Sandeep has made suggestions that it's going to become a layer 1. But they've also got a burn mechanism going on where they're burning tokens, but this only works in an upward market. And the biggest fault of Polygon, the biggest fault Sandeep ever made, was releasing all of the major partnerships in June 2022. If you go back and look between March 22 and October 22, Polygon was the darling of crypto. Everybody loved it. It was partnering with Disney, partnering with Starbucks. And at the time I was saying, these are really good ideas. NFT, VIP programs, where you can go and get special coffees, you get special discounts, you've got a special NFT to give you access in Disney, blah, blah, blah. All these things, absolutely amazing. All released at completely the wrong time, okay? All released at the wrong time. And that was their issue. Now, they are burning their token, which is a good thing. According to the data, active accounts surged to 750,000 to 800,000 in early January, but it's settled at 400 to 500,000 daily active accounts. Now, you compare that with the majority of other chains that are around it on here. It's ranked lower than Pi, and Pi is a scam. It's worth $100 million market cap wise less than Pi, which is trash. Okay, it's ranked lower than Ethereum Classic, which is also trash. It makes no sense. Apart from the tokenomics, obviously, if it's the tokenomics would suppress the price, but you get the point. Now, 11 cents is ridiculous for this price. It's down 90% from where it should be, and it was doing this before everything else did this. So Polygon was falling before it was fashionable at the end of last year. It was falling and falling and falling. Now, burning the tokens is a good thing. At some point, it is going to start to tick back up. Now, burning $2.8 to $3 million in 1 month is pro rata about 36 million. Okay, 36 million is about 3% of the market cap. That's a decent burn for me. That's a decent burn. So the network is ticking up. The number of people using the network, the volume on there is ticking up. They are starting to burn more and more tokens. I think the next move for Polygon is to become a layer 1. That's its next move. And again, if it does that, easily you're looking back probably towards this range here, about 3 million. I mean, it's worth a third of the price of Chronos. Chronos probably has 3,000 daily active users on Chronos. And we're talking in this article here about Polygon having 400 to 500,000 daily active accounts. So it's 100 times more active than Chronos, and it's a third of the price. Again, the token does not necessarily reflect the project and vice versa. I could pick 5 projects down here which could easily be 4 to 5 times higher. The same way, I could probably pick several of these tokens from up here and say they shouldn't be here. I could start with Bitcoin Cash, which is absolute trash. I could start with Dogecoin, absolute trash. There's 2 off the top of my head. If I'm going to pick another one, and I'm not going to pick on Litecoin because Tariq will be very sad and very unhappy with me. But Chronos is 30th with 2 or 3,000 daily users. I'm not saying it's trash, by the way, but you get the point. Polkadot, there we go, garbage. It's still 2.5 times the value of Polygon. So the market cap of a project does not necessarily reflect the value, of my opinion, of that project. Anyway, we should probably get to the end of the show because I feel like I have been talking for hours, and I have. Now, I haven't done the announcement yet, and I'm not going to do it just yet. But I am going to put up a stream for tomorrow. Now, anyway, before I go, very quickly, our quiz night is tomorrow night. Maple Finance, Wednesday, 7 p.m. Central European Time. That is 7 hours from now. If it's midday where you are, it's 7 p.m. If it's 3 p.m. where you are, it's 10 p.m. tonight. Sorry, 10 p.m. tomorrow night. It's interactive. It's interactive on Binance Square. It's interactive on the other place. You can play along, and we're going to give away probably, I don't know, $30 worth of maple syrup tokens on that night. So tune in tomorrow night. There is going to be a second stream by me tomorrow afternoon, and it's part of the announcement. If you're an OG, and Danny, I think Mary's in there as well, KB, Kishan. If you're in the OG Telegram group, I have posted in there what the announcement is. If you're not, you're probably going to have to wait until tomorrow. But anyway, I'm going to go. I've got a ton of work to do. Thank you all so much for watching. I'm going to see you tomorrow morning. No, tomorrow afternoon. Big day tomorrow. Really busy day tomorrow. Going to be probably very tired by tomorrow night. But I will see you all tomorrow for the special stream. I'll see you for the quiz. And apart from that, have a great day. Take care. Bye-bye.